There are a couple people that are very optimistic about the 2024 housing market, and it's actually not realtors this time. So let's get into it, you guys. So, first of all, we've got builders. The builders are saying the housing market will take off in 2024, a renaissance as new construction demand is set to surge. And this is according to the CEO of the National Association of Home Builders. They are saying that construction demand is showing signs of perking up, and they're really looking forward to 2024 taking off. They expect to see higher demand and construction in 2024, and basically doing a pivot from what we've seen in the last few years. Heading towards a housing renaissance, shaping up to be the pivot year where we leave the doldrums of the post-COVID slowdown and really pivot into the next 5 or 6 years of the housing market where we're going to see some great growth. So, I mean, that's pretty confident. I find that interesting. The Cromford report also mentioned that the National Association of Home Builders, the index actually increased. It jumped from a very weak 34 back in November to 37 in December, and then moved up to 44 in January. And last year at this time, it was at 31. So the sentiment is really trending higher very fast. It's not as high as it has been in the past when it was in the 50s, but builders are certainly optimistic. And one of the reasons is they're basically saying people are going to just get comfortable with the rates. They think rates will continue to decline, but we're also going to realize that 3 to 4% mortgage rates are not likely going to be coming back. So I think builders really see an opportunity here in that a lot of buyers have decided to go towards new construction because there aren't as many options with resale homes right now, since so many sellers aren't selling, they're holding on to their rates, and new construction is ready to fill that gap. So I think that's where that sentiment's coming from, especially knowing that rates have softened a little bit, with the hope that they will continue to this year, and just knowing that we're going to need to come to terms with the fact that probably not seeing 3% mortgage rates again anytime soon. So they are one group that is very optimistic, but you know who else is optimistic? Sellers. Sellers in the Phoenix area are very optimistic. Here's why. The average list price per square foot for active listings out there just hit an all-time high. An all-time high, 370. This is higher than it was in the peak of May of 2022 and June of 2023. So we have not seen this number before. And what this is all of the listings that are on the market right now, the average price per square foot for those. So sellers are very optimistic and asking these high prices, and kind of ready for a good year, apparently. And so what does that tell us? Well, they're assuming that rates are going to go down, the demand's going to come back, and they have a shot at getting, a really great price for their house. And we'll see if that actually comes true. Hard to know right now, but they're certainly feeling the momentum, apparently, and ready to be listing their homes at these prices. So I have a little bit more to talk about with demand here in Phoenix, so we'll get into that in a minute. But before we get there, let's talk about what's going on with the Fed, because this is always important. Fed to begin rate cut discussions, but avoid teeing up the first one. So they're going to meet on January 30th. And it says that it's widely expected that they're going to hold interest rates steady. Now, I say this all the time, but Fed funds rate is not the mortgage rate, but what they do does affect where mortgage rates go. So we need to pay attention to this. The overall expectation is that they will start cutting rates later this year. That's what everyone was kind of hoping for and gathering from their commentary back in December. But for now, it sounds like they won't be doing much at this meeting. That's the expectation. And possibly data dependent, may be cutting rates in the future. So what happened with mortgage rates? Well, it might be confusing because Mortgage News Daily is a really great resource. And they're saying that all of the news out there had been saying that interest rates were the lowest level since May. That's what they hit this week, but that's actually not true. Mortgage rates actually went up slightly this past week. And they go through all the details of what happened in the bond market to cause that and what's going on. But it's not a true statement if you're seeing those articles out there about rates being the lowest level since May, because they did go up a little bit. So if you're out there as a buyer, make sure you're checking in with your lender to find out what's going on. Make sure they got your back and they're guiding you appropriately on what's going on. And by the way, if any of this is helpful, I'd love if you'd subscribe or share this video with someone who would also find it helpful. So let's talk about what's going on in Phoenix. I am sharing with you guys the contract ratio this week, and we'll also get into the CMI, but contract ratio is really important, and the Cromford report shared it this week because we're starting to see some changes in the contract ratio. And you can see that number is 42.5. And for the contract ratio, what they're looking at is the number of listings on the market that are available for sale as compared to the number of listings that are actually under contract and no longer available, but they're still listed on the market. So at 40, that is where we start to move into a seller's market, according to the Cromford report. So now we're at 42.5, and we've seen some of this small growth here, but they're breaking it down by a few cities that have seen some major changes. So I want to walk you guys through this. Apache Junction has had a 64% change over the last 2 weeks, and that's a pretty quick amount of time for these things to be changing this fast. And really, since the start of the year, it seems like the momentum has just really taken off on a lot of different things, demand especially. But Anthem, a 47% increase, Arizona City, 47, Gilbert, 46, Sun Lakes, 45, Chandler, 43, Tempe, 31, Peoria, 31, and Gold Canyon, 30%. So those have seen the most rapid growth in demand versus supply, according to the Cromford report and this contract ratio that we're looking at. They also note that this is one of the leading indicators of a change in the market. So this is going to be really important to watch. The contract ratio is much more real time because it's capturing those listings going under contract and active listings on the market, whereas the CMI is not as real time, and it's also adjusted for seasonality and things like that. Contract ratio is not adjusted for seasonality. That's why you see all these peaks and valleys. So the cities that have gone backwards are Fountain Hills, Laveen, Goodyear, and Sun City West. So as I said, most areas, a contract ratio over 40 is consistent with a seller's market. It's a little bit different for areas like Paradise Valley. They say that, and Scottsdale as well, more of those luxury markets are a bit more sensitive, so that number is different. But for the majority of the valley, going over 40 is also showing that we're moving into that seller's market territory. We're certainly seeing the demand increase. And the reason we can say it's demand is because we're seeing those listings go under contract versus just being active on the market. So the CMI this week, let's talk about that. 115.9, almost 116. We've gone up once again. Demand is 72.3, so that's 28% below normal demand, but that has been growing for sure. And supply is about 38% below normal. And that's actually, I can't remember where we were at last week, but we haven't seen too much growth on the supply side. I think we will start to see more homes coming on the market, but I also think that our demand is going to increase. So I don't know that the supply is really going to change this overall index all that much. So for anyone who's new, anything over 110 is considered a seller's market. So we've got the CMI showing seller's market as well as the contract ratio, and just really seeing a lot of momentum in the market so far this year. And finally, looking at all of these cities as it relates to the CMI, we've got another week of all green arrows. The average change of all of these cities over the last month is 12.6%, and last week it was 10%. So again, another indication of that accelerating market moving in the direction favorable for sellers. They're saying that, in January, new listings arriving in stronger numbers is pretty normal, but the total number of supply on the market right now remains below normal. Demand appears to be rising significantly faster than the supply. So we'll see if that continues. Of course, our sales volume has remained low, and January is probably going to look pretty low for sales because a lot of that are the contracts that were negotiated in December, and December is usually a slower month. So our January number of closings and sales, I don't think will be that awesome to see. But getting into February and March, we'll see whether or not there's much of a recovery as it relates to sales. And from what I'm seeing out there right now, I think there is a lot more activity. I've been getting a lot more calls from clients, new clients, and also past clients wanting to make a move and do something one way or the other, selling and buying. So I do expect that we're going to have a busy spring, but we'll see what actually happens. Make sure to check the description for our real estate resources, whether you're a buyer or a seller, and check out this video right here about list price strategies that I recommend to my clients.